1 million straight in crypto, in cold storage.
I think Bitcoin will eventually hit $1 million, and I'll explain why in this video. And I'll also explain in this video how you can do investment research on cryptocurrencies, as most cryptos are a scam. We'll also talk about finance lessons from the 7th episode of Billion Season 3, based on my work experience at Goldman Sachs in New York City, and based on my work experience at the top hedge funds in the world. Now, please like, comment, and subscribe, and stick around, because at the end of this video, I'm going to grade the episode for Wall Street realism with a buy, hold, or sell rating. Now, we'll talk about how to invest in cryptos and why I think Bitcoin will hit $1 million later on in this video. And you can always fast forward to this time code you see here to learn about how to invest in cryptocurrencies and why I think Bitcoin will hit $1 million. Let's quickly talk about the episode first, though. In this episode, hedge fund portfolio manager Axe bribed his trader Maffei with $1 million in cryptocurrencies because Maffei took one for the team and spared on-site hedge fund psychiatrist Wendy, who he loves, and portfolio manager Axe from potentially going to jail for manipulating the Ice Juice IPO.
And they're off. Ice Juice, trading under the symbol IceJ, already pushing north of 20.
Closing price, $3.89. This is one busted ass IPO. Let's crack open that bottle.
So how did Axe Capital profit from the Ice Juice IPO?
The stock is running. When will you do it?
Soon.
Now, Axe Capital destroyed the IPO, meaning the Ice Juice IPO, by paying somebody to put poison inside this juice, and they profited by shorting Ice Juice. And how did Axe Capital's on-site psychiatrist Wendy hear about the Ice Juice short thesis that got her into trouble?
We're short a name.
Maybe I'll get in on this. Anybody betting it won't turn?
No, ma'am. This is a red light short. Axe doesn't get positions this size wrong.
Now, short selling works like this. An investor borrows shares, then sells them immediately at the current stock market price, and later buys them back, meaning they cover their short, hoping that the price has fallen, and they pocket the difference as a profit. Then they return the borrowed shares. Now, Wendy, who is married to government prosecutor Chuck Rhodes, meets with Axe and tries to get them out of this mess.
My number one priority, getting Wendy clear of her short position.
That's my priority, too.
But how?
How the heck is Wendy even tied into this mess?
The Ice Juice short? How do I get a piece of that?
There's an allocation. I can make it happen.
As much as I can get.
You got it, baller.
Now, the government has evidence that shows Wendy calling Axe's trader Maffei to short Ice Juice. And then Axe bribes trader Maffei with $1 million in crypto to lie and say that Maffei was the one that told Wendy to short the Ice Juice IPO on the phone. Now, what did Axe say to trader Maffei to get him to do this?
Would you get into the muck? The muck? For the firm? For me? Well, for your co-workers, would you back them all the way?
So this is what some corrupt portfolio managers and owners do in a hedge fund. They get their minions, usually analysts and sometimes traders, to do the dirty work so that they are protected. And if this ever happens to you, your response should be exactly this. I'm not comfortable with this conversation. Then if you get fired, hire a lawyer. And most hedge funds are, of course, not corrupt. And separately, anyone that works at a hedge fund should always be aware that every conversation and phone call could be monitored by the FBI. And the same thing with retail investors using online forums when it comes to government AI analysis tools. If they comment online and say anything that manipulates the stock price, you got to be careful. And don't get seduced into breaking the law, of course. Now, at some hedge funds like Bridgewater, which I'm not saying is corrupt at all, but at Bridgewater, which is the largest hedge fund in the world, every single conversation is recorded, except in the bathrooms, and the employees know this. And what a brutally uncomfortable corporate culture, eh? And in business, before our meetings, we need to understand what's important to the person that you're meeting with, as every battle is won before it's been fought.
I need to understand what motivates him, beyond the money and the trappings.
The idea that he's serving something greater than himself is what drives him. But he has an old-fashioned sense of honor, chivalry, almost.
Now, people are usually motivated by one of three things in business. Number one, they want to make more money. Number two, they want to get promoted. Number three, they want to enjoy the people they work with. So So how can you turn an informational meeting into a job offer at a hedge fund? Well, the strategy that works for my clients is once you get an informational meeting with a hedge fund, which I can help you with, then you want to understand what stocks the hedge fund owns. And by law, if you manage over $100 million, then every 3 months, you must file with the SEC, which shows what stocks you own. So you know what stocks an analyst or a portfolio manager is likely to ask you about in your interview or informational meeting. So how can you help the person that you're meeting with make money or potentially get promoted? Well, you can do thorough research on their portfolio companies and create write-ups, not only on their long positions, but you can also suggest short positions or short ideas to the hedge fund in order to hedge their long exposure. And how do you do this? Well, there's 3 ways. Number 1, you use my 100-step investment write-up template to do research on one of their companies. And when they ask you for your thoughts on their positions, you pull out your 1-page write-up and detailed report on the companies using this template you see right here. Number 2, you also do a thorough forensic financial statement analysis, 1-page and 24-page write-up using my analysis product right here. And it uses AI. Now, make sure to also do write-ups on short ideas, as it's very easy for analysts and portfolio managers to come up with long ideas. Number 3, join my Finance Bootcamp program, where I train you on how to be an incredible hedge fund analyst stock picker with more than 300 hours of daily Zoom meetings with me, where you cover 30 stocks in any sector, and I help you come up with longs and shorts and how to create amazing financial models. Now, it's a boot camp, as you're treated like you're an analyst with morning meetings, how to research companies with target prices, and so much more. I also provide you with a comprehensive 150-page document on how to answer every interview question, as I've conducted more than 1,000 finance interviews in my life, which is about 1 per week for about 20 years, while I worked at Goldman and at the top hedge funds, and in my own hedge fund and the venture capital sector. Now, in my Finance Bootcamp program, you get all of my templates, 700 hours of my video lectures, 10 hours of one-on-ones with me, and 300 hours of daily group coaching calls with me. So please see the link in the description to set up a call with me to learn much more. Separately, what do you do if you work at a hedge fund and this happens to you?
The feds interviewed me last week.
So in the matter of the ice juice short that you booked, we will need you to step to Wendy Rhodes calling in the order.
This is the part where you talk.
My client prefers not to answer.
So you do what Mafi did, meaning you hire your own lawyer and don't use your firm's lawyer ever. Why? Because the lawyer representing the company you work for cares only about protecting the firm and not you. And right here in this next scene, you see this in action as Axe Capital is talking to Axe's firm's lawyer.
We threatened to fire his ass.
I'd be careful there, Wax.
Well, you would. You're a lawyer, but I'm a ruffian. I say we let him know it's not just Axe Capital, but it's every shop on the street. You'll be dead man walking.
Might actually harden his stance.
Don't trust your company's lawyer. Now, it turns out that Trader Mafi was convinced to cooperate with Axe's on-site psychiatrist, potentially due to the world's oldest profession.
Hi, Mafi. No one else at Axe Capital would ask how it would be for me. That's what makes you so special, Dudley.
Now, this worked as Mafi cooperated and took ownership for the stock idea, which resulted in this.
The trade was initiated by another party.
What can you prove at trial?
Nothing on Mr. Axelrod at this time. The Eastern District, we're dismissing the indictment.
Now, money talks when you're a billionaire and you hire the best lawyer, and when it comes to lawyers, you usually get what you pay for, of course. Now, as a way to say thank you to Mafi, Axe does this.
This is for you. For stepping up. For being the kind of rock that great companies are built upon. 1 million straight in crypto. In cold storage. Thank you, Mafi.
The device that contains the crypto is a cold storage wallet, meaning a device that looks like this. This is Ledger Nano that contains cryptos. And it's called a cold storage wallet because it doesn't need to be powered on, meaning attached to the internet in order for it to work. Now, a hot storage wallet means it requires electricity for it to work, meaning a software-based wallet like you see on Coinbase. And a cold storage wallet like this is much more secure. Now, in order for the trader to get access to the cryptos, he needs a private key, which should have been mentioned when portfolio manager Axe gave him the device. So how do you get cryptos to be stored on this device or any cold or hot storage wallet? Well, the best way to explain this is to use email as an example. Your email address that you give out to the public You give it to them to send you an email, but your password is private. The same thing with crypto wallets. You have a public key that looks like this, and you give it to anybody that you need to send you money. But in order to access the cryptos, you need a private key that, of course, you never share with anybody. Let me discuss why I'm so bullish on Bitcoin in the long run and how you can do investment research on cryptos. So Bitcoin is, relative to other cryptocurrencies, a safer investment. Why? Because it sort of has first mover advantage, and Bitcoin is like digital gold, and like gold, there is a limit on the number of Bitcoin that will ever exist. Currently, there are about 20 million Bitcoins in existence, and this will reach the maximum supply of 21 million by the year 2140. Now, the problem with traditional fiat, meaning paper-based currency, is that the government keeps printing more of this stuff, which dilutes your net worth. In fact, since COVID, the government has increased the supply of money by roughly $6 trillion. In essence, cash is trash and a lousy investment. Now, if we go together to treasury.gov, we see that of the close to $38 trillion in United States debt, we see which foreign countries own the debt. And we see here that China is potentially buying less debt, while the UK and Japan, who are recently very friendly with the United States, are buying more debt. So what will China, who is getting less friendly with the United States, potentially buy more of in the long run instead of US debt? Well, the answer is gold and digital gold, which is Bitcoin. And Bitcoin is likely the safest of all the cryptos to invest in, which is why it's called digital gold. Now, back in 2004, ticker GLD, meaning the gold ETF, was created. So it made it easier for you and I to buy gold that is likely real gold, instead of buying gold bars from seedy parts of cities that might not be real gold. And recently in 2024, the Securities and Exchange Commission has allowed retail and institutional investors to buy Bitcoin spot ETFs. And this is a massive positive catalyst, because when we use these cold storage wallets, these guys here, it's so damn confusing to set them up that at the last second, before you place your buy order for Bitcoin, many people cut their orders in half. Also, given the cryptocurrency exchange corruptions, we are less likely to want to buy it. But buying Bitcoin ETFs from a reputable firm alleviates this concern. Now, when I started investing in Bitcoin well over 10 years ago, per this chart, it was mainly retail investors. Now, the catalyst to drive up the price was the fact that the big money, meaning institutional investors, which also includes governments and sovereign wealth funds, are investing at a much faster rate than a tiny increase in the Bitcoin supply. So how do I come up with my $1 million target price on Bitcoin in the long run? And how can you do investment research on Bitcoin? Well, you do investment research on stocks by reading what is called the S1, meaning the IPO prospectus. And since there are no government rules yet on issuing cryptocurrency prospectuses like the one I just showed you, I can help you make one, which is part of my coaching and video services for my clients. And so here's my cryptocurrency investment research dashboard. And let's click right here on ICO research, and here we can do research on existing or new cryptos. And let's enter a pretend crypto and call it Crypto X. Now, the research process is 49 steps, starting with the purpose of the crypto and the long-term investment strategy. Then you do research based on these and many other research sources online. Then based on your research, you talk about the positives and the negatives. For example, a negative can be that there is no supply limit. Then you analyze the management team, if applicable, and the developer community. And then we compare the strengths and weaknesses versus competing cryptos. Then we move on to wallets and exchanges that accept the crypto that you're researching. And then for steps 29 through 30, and this is crucial, what is the current and maximum supply number and date of the maximum supply, if applicable? Then we have country, accounting, and bug risk right here. And next up, we have mining incentives and social media and other followers. Then most importantly, we quantify an estimate on the long-term target price. Now, one way we can look at it, among many methodologies, is to look at the global money supply, which is about $96 trillion. And we compare that to the current global combined cryptocurrency market cap, which is roughly $3.5 trillion. You look at the ratio. And we can estimate what we think the ratio of crypto to fiat, meaning traditional currency, will be in the future. Then if you want, you can use a discount rate using the yield curve. And this is, of course, one of many ways to value cryptos. Then lastly, we look at liquidity and technical analysis, meaning the RSI, support and resistance levels, and other technical analysis metrics. And this will make sure that you don't rely on FOMO, meaning fear of missing out, to buy at a crazy high price. And remember, always tell yourself you can buy it cheaper and be patient. So how much of your portfolio should be in cryptos? Well, for more than 10 years, I've been saying no more than 5%. But once the Securities and Exchange Commission regulates cryptos with S1 filing mandates that list all the risks, then moving above 5% might make sense. Now, if you want to learn more about this and my many other templates for my clients to invest in stocks, as well as 35 options templates and using AI forensic financial statement analysis and my real estate template and much, much more, then please see the link in the description to book a call with me about joining my programs and coaching services. Let's get back to the episode. In addition to bribing trader Maffei with $1 million in cryptos, Axe ended up paying a massive fine to the government to put the ice juice disaster behind him.
First check for $390 large to the SEC. Other one for $181K to Maffei for expenses.
Now, the $300 million fine is not tax deductible. So if Axe Capital pays 23% in taxes, for example, then the real cost is $390 million divided by 1 minus 23%, which means $506 million. Now, here are the top 5 fines paid by hedge funds. The largest fine was $1.8 billion in 2013 by Steve Cohen at SAC. And we know that Bobby Axelrod and Axe Capital is partially based on Steve Cohen and SAC. Now, for more details on this, please see my Billions review on Season 1, Episode 6. The link is in the description. So, who went to jail for the ice juice poison, meaning this stuff, that was placed inside this product?
FBI! Step back, everyone. Dr. Gilbert, this is a properly executed search warrant. We're not the ketchup.
Now, Axe had the poison placed in the doctor's fridge. Now, what is the financial trail that got the doctor in trouble?
We recently came into possession of your trading records, outlining your handsome $11 million profit on the ice juice.
What do you need?
An investor account established, showing a big short position in ice juice, but dated back before it happened.
That's not accurate at all, because this is Victor Mateo, who's worked with Axe. So there's no way that the government wouldn't make the connection between Axe and Victor. Quick side note, if you want to learn about how an IPO works, meaning this S1, and the Ice Juice IPO, please watch my review of Season 2, Episode 11. The link is in the description. Now let's talk about grading of this episode for Wall Street Realism with a buy, hold, or sell rating. As much as I love this show, this is the least accurate episode that I've reviewed so far because of what I just mentioned about Victor Mateo. Also, when Axe gave Maffei the cold storage device, he should have also provided him with a private key. You lose that, and you can lose your cryptos. But to be fair and intellectually honest though, this isn't shown in the episode, but not necessarily a factual mistake. Separately, a $1 million bonus for Maffei is nothing when it comes to saving the firm, especially since Axe paid a $300 million fine and makes billions. Plus, the fine could have been much bigger, as large as SAC's $1.8 billion fine, and Axe Capital we know is likely based on SAC. And as a result, I'm going to give this episode a sell rating. Please subscribe, and I'll see you soon in our next reaction video when we react to Season 3, Episode 8. Thank you.